What is going on, everyone? Welcome back to the channel. This is the third episode in the new series. We are doing just recording every trade we take, breaking it down from the higher time frame analysis all the way to the entry and the management. So this was the third trade of the week. This one was on EURJPY, which I took on Friday afternoon, Sydney time, during the London session. So this one was another win with about 1.1 risk to reward, getting about 21 pips. So if we look at the trade over here, we can see we got about 21 pips, right, on EURJPY. And if you can see the week over here, this was the first video I did on Euro AUD. Then we had GU on Thursday, and then EURJPY on Friday. So that was the week. It was a clean week, no real hard trades. Everything basically followed what I thought it would do. So it wasn't a difficult week to trade. It was more sort of just waiting for what I was wanting to see from the markets, and then that's what we ended up getting. So let's break this last trade of the week down, and we'll start from the sort of high time frame analysis. Let's just go into replay mode over here so we can break it down and see how we went. So we'll start off on sort of the 4-hour time frame over here. We'll just go back one more bar, and then we can sort of go from here. So heading into this London session, right? This was the previous 4-hour candle, and as you guys know, sort of I like to see, I like to base my bias off the previous 4-hour candle close. Obviously, because we're heading into the London session, for me, there's a higher probability that we can sort of look to see if the next 4-hour candle can create a top wick and then flip to sort of fill this bottom wick, and maybe come down to tap back into this level of support over here, right? And keep in mind, that doesn't mean I'm thinking the entire day is going to be bearish. It just means for these next couple of hours, I'm looking to see if we can create some sort of structure on the lower time frames, and sort of push down below into these levels, just following that bias of the previous 4-hour levels. Okay, and yeah, if you guys can see, we're sort of in this range, right, which gives us a nice opportunity to sort of take trades to the bottom and to the top, depending on what we see on the lower time frame. So if you look at the hourly, you can see as well, you guys know I love to trade these nice clean ranges, right? And below this sort of 181.3 level, we have this big clean range on EJ for about 21 pips, right? So that's what I saw at the start of the session, and that's what I was looking to target. And it becomes a lot clearer on the sort of lower time frames as well. You can see sort of price creating this sort of strong level of support right up around here. And again, if we look to the left over here, below this level, we have sort of that nice clean range where we pass through once, twice, 3 times, before we start seeing some trouble over here, right? So what I was looking to see was just price closing below this level on the 15-minute time frame with some nice structure, just continuing this sort of downtrend, trying to see if we can break out of this sort of, I guess you could call it like a triangle, but realistically, we're just breaking below this level of support, perhaps coming down to touch back into some of these levels below. So if we fast forward a little bit, you can see I think the next one broke out, but again, this is a bit early for me, right? If this was in session time, I would have happily taken this trade, but you can see it's 1 a.m. Eastern time, right? Which is a bit early. It's quite a few hours before London opens, which for me is a bit early. Usually see some inconsistencies. So I let that one go, and I was just watching, waiting to see what price does. You can see again, important thing here, we have more evidence, right? Price comes down, makes a lower low, lower high, lower low. If we start seeing price sort of create a new resistance up here by closing bearish, and then we get a closure back below this previous level of support, I mean, it sort of just makes sense, right? If price can keep pushing lower and lower, there's a higher probability that it's going to continue that trend. And we're not going to, try and be smart about it. We just sort of follow what we think the probabilities are going to do. And then you can see here, right at around 2:15 Eastern time, so about 45 minutes prior to London Open, which is usually when that volume starts kicking in, we have that nice breakout with about a 3.5 pip wick and a sort of 19 pip candle, right? So that's what I was looking for. You can see if we look at the 30-minute time frame as well, very nice sort of 30-minute breakout as well, clean range to the left, everything's sort of lining up. You can see this clear downtrend. If you look on the 5-minute time frame as well, on this breakout, you have a very nice structure here, right? Price is making lower lows, coming up, creating resistance, showing evidence that it doesn't want to continue to sort of push up and break this downward structure. So there's just more and more evidence price looks to want to go down. And this candle on the breakout here, which created that bottom wick for the 15-minute candle, is something I love to see on a breakout on the lower time frames. You guys will know I sort of call this a head-tail structure, and it's essentially just extra evidence of price breaking below a level, trying to push back and then rejecting, right? So if you tell yourself, if price is sort of breaking these lows, creating a low, retesting, and then if it re-breaks these lows, there's a much higher chance price is going to continue down. Okay, because if you think about what this candle looks like on the lower time frames, it's just going to be a break and retest, right? So if you look at the 1-minute time frame, you can see sort of price comes down, creates a low, and then creates resistance, continues down, right? And that's all a break and retest is, right? It's just lower low, lower high, lower low, continuation. And when you have all of these sort of things coming together, where you have the 4-hour time frame closing bearish, the hourly is breaking below a major level, you're even breaking below this sort of 181.3, which we said at the start is that clean level we were looking for. Plus you have 5-minute structure, 30-minute breakout, 15-minute breakout, pre-London volume. You know, it's all just probabilities coming together, and you have a higher probability trade. So that's all I look for. And you'll know if you look through my previous videos on this series, at least, it's all the exact same, right? We're just waiting for these things to happen in the market and capitalize on small areas of time where perhaps there's a little bit more probability skew in our direction, instead of placing trades with a more random sort of outcome. And that's what we did, especially when you manage risk. We took the trade, stops above the previous candle. If you look at the 5-minute as well, it's always nice to see you sort of have a stop loss that makes sense, right? You're putting your stops above the previous level of resistance, above this high. So if price is sort of coming back into these levels, it doesn't make sense. Like, why would price continuously make lows, reject, continuously make lows, right? If it starts breaking these highs, the probability of this trade winning is just much less. And that's where you just got to call it. So I put my sell stop right below the low over there. In terms of targets, we were looking sort of a 1-to-1 back down to this previous level over here, right? So back to these previous lows and seeing if we can get some volume to push down even further. So we'll go on the 5-minute and see how we managed this trade. So you can see it was actually very clean, created a nice top wick and then pushed straight down. And this is a pattern I love to see, sort of that break and retest and then a continuation break and close below. If you look at the 5-minute, we're sort of approaching a level we can look to manage our trade over here. And then we have that sort of major level down here, right? So that's what I was thinking. At this stage, you sort of have a lot of control in this trade, right? You can tell yourself, if price starts now breaking back above these levels, it doesn't mean it's going to lose, but it's just the probability of this trade winning decreases quite a lot, especially on a Friday. You're already sort of up for the week. You know, that's an area where you can say, I'm not willing to sort of hold on to this and I'm ready to, you know, close this trade at, you know, minus half of my risk. And then, you know, it's not the end of the world. But for me, there was no issues. You just sort of have that plan and you're in control of this trade. So you just see what happens. And I don't think it was any trouble really. It just pushed basically straight away. At this stage, when we sort of had this deep pullback, it was a little bit early for me to TP down here. you could have if you really wanted to, like 1 to 0.84 is really not bad. But for me, I was liking the volume. I was already sort of up for the week. Didn't think, there's a need to close this early. If we get break even, that's just how it is. But yeah, I was watching this closely. Not 100% of break even. Definitely, if we break above these highs, I would have cut it. But I was just wanting to see how price reacts. I didn't want to sort of go break even and then price sort of taps into these levels and then continues down, because there's nothing to say, price isn't just tapping into these levels and then pushing back. Sorry, I skipped ahead there, but let's continue on the 5-minute. And you can see sort of as soon as this 1 minute, we'll actually go to the 1 minute, might make it easier. As soon as this 1 minute sort of started to break these lows once again, over here, the Wi-Fi is a little bit slow, excuse me. There you go. So you tapped into that level, and what I did here was I just tried to trail this stop, right? So as soon as we tapped into this level, I just tried to sort of keep my stops below these previous sort of 1 minute candles, considering we've already tapped into this strong 15-minute level we found earlier. I was just looking to see if this thing can run. So I was just trailing my stop at the previous highs. And as soon as this sort of formed over here, we ended up getting stopped out, right? Just got tapped out there, which is stuff like that's going to happen. And then of course we ended up going down quite a bit further. But this is something that is sort of personal preference, right? You can see it ended up going all the way down to about a 1 to 2.5 risk to reward, which is always, to get tapped out like that, it's not the best, but it happens. And it's something you have to sort of work around and not get swallowed up by, and just accept that, you can't sort of predict those sort of things. Because if I didn't trail my stop and price just sort of pushed back all the way, I would have been a bit like, what am I doing? Right? So it's one of those things you just have to accept, and sort of learn to integrate better into as you go further into your trading experience, right? It's something you have to learn to, just grow around and continue to improve on. But yeah, looking back, it's always easy, but I'm very happy with that trade. And I think I'm going to leave it there because my Wi-Fi is very slow. But that was the trade. That was the week. I hope you guys enjoyed.